Oh, good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined today by Ed Carson on today's show. On this half day of trading ahead of the July 4th holiday, we'll take a look at another record closing high for the Nasdaq and S&P 500. Before we get to that, let me throw it over to Ed, who's got three stocks to watch.
Yeah, there were definitely market didn't act like it was a half day. Got a full day's work in. It feels like number of stocks moving: ASML, Tencent Music, and Angico-Eagle Mines.
Okay, yeah, Agnico-Eagle mines. I think we put that on the in the leaderboard model portfolio today. So let's start by taking a look at the Nasdaq. And Ed, it was an impressive performance for the market on Tuesday. You had a nice retaking of the 18,000 level, record closing high, and another record closing high for the Nasdaq today. But it's getting close to being extended again, it looks like.
It is extended. The question is, it's getting increasingly extended now. It's closing 7.6% above the 50-day line. A couple of weeks ago, it got more than 8% above that level. That sort of triggered the pause. It was really constructive. Maybe it would have been nicer if we saw a little longer pause, because all it takes is like 1-2 steps, and then boom, we're getting pretty high up there again. But the action's really strong. Obviously, Tesla keeps moving, Nvidia rebounded, a lot of software names, and and then there's a lot of other names outside of tech which aren't necessarily on the Nasdaq. So there's a lot of strength in this market. That is maybe one of the bigger concerns, yellow flags, is that Nasdaq getting extended again.
Yeah, yeah. Well, Nasdaq breadth not quite 2-to-1 positive. It was positive, but a little less than 2-to-1. Let's take a look at the S&P 500, which reclaimed or actually moved above first close above that 5,500 level yesterday. It too extended gains today, and we're really seeing, the advanced decline line for NYSE stocks look a lot better than the Nasdaq at this point. And Ed, that has to be because, well, we're seeing more stocks participating here on the NYSE, whether it's financials, energy, you name it.
Yeah, so there's definitely more breadth a little bit, especially on the NYSE side, and there's definitely more stocks to be able to buy. This is not, the S&P doesn't look extended yet. It wasn't never really that extended a couple weeks ago, so that helps. If it goes out much more from here, it probably would be looking very strong. I mean, aside from a test on the 21-day line a few weeks ago, several weeks ago, it's just been cruising along, just really strong power trend. You look on a weekly on any of these things on the S&P or the Nasdaq, and it's just been really a strong upward trend.
All right. Well, I didn't mention the Nasdaq actually ended. The composite ended with a gain of 0.9% today. S&P 500 up 0.5%. Once again, we had the Dow Jones Industrial Average and the Russell 2000 lag a little bit. Dow ended fractionally lower, but still making a good stand here at the 50-day moving average. And you got a couple of financial stocks that are really showing strength in the Dow as well.
Yeah, we're going to have earnings from a lot of those names, from the Dow or S&P in next week and then the following week. So earnings season will be picking up. Yeah, this doesn't look too bad. You could imagine the Dow, even the Dow, which is definitely lagging. You can see this relative strength line, huge lag just in the last several months. But you could imagine this easily making a move to the upside with 1 or 2.
All right. Well, let's finish by talking about the Russell 2000 small cap index, and this one is still waging a battle at the 50-day moving average. Looks worse than the Dow. It's still lagging pretty good here, but this market has shown that it doesn't need small caps to continue to grind higher.
Yeah, at least it's not falling apart. I mean, I think if this were falling apart, that'd be the issue. It does show that while breadth isn't as bad as you might think, it's also not as good as you would hope. That's for sure.
Gotcha, gotcha. All right, we'll cover a couple of sector ETFs that you wanted to take a look at. Obviously, been talking about the resurgence of software stocks. Before we go to IGV, let's start with SMH because we're still seeing plenty of strength in the semiconductor sector and a nice day of outperformance for Nvidia today. So let's take a look at SMH. There it is, getting support at the 21-day line.
Yeah, and this looks a lot like NVIDIA, which I'll just call it for a second because NVIDIA is the biggest name. So both sort of bouncing off the 21-day line. Again, it'd probably be nice to see this pause a little longer. You're not forming too many bases, but I mean, it's showing a lot of strength.
And TSM, I believe, is another top weighting in the SMH as well.
Very
Made
strong, yeah.
another strong move, just like Nvidia today. All right, well, software stocks, got to respect a lot of these enterprise software names. This is the IGV, basically a software ETF, and that is quite an explosive move off lows after reclaiming that 200-day moving average.
Yeah, been a big, strong month for the group, and it keeps on moving. It'd be great if it could find a pause, but yeah, a lot of software names that we weren't talking about a month ago are really come to the fore.
All right, let's take a look at XLF in the financial space. And we're talking about the outperformance of JP Morgan and Goldman Sachs in the Dow, but the XLF is showing, I mean, the relative strength line is really trending lower, but it's kind of trying to get back near highs and showing some strength here.
Yeah, and at least this is coming after hitting highs as opposed to some other things that were like been falling, falling, falling. So anything consolidating is having that issue. Even though this is only a 5% deep base, the Nasdaq and S&P have been so strong. So there are a lot of financials that are looking like this or coming up to the highs. So a lot of interesting action here.
All right, let's take a look at XME, which was a notable area of strength in the market today. We saw a lot of gold stocks outperforming. We're going to take a look at one in just a little bit, but metal stocks, lots of commodity names moving today.
Gold, copper, coal, some steel metal plays, a lot of across the board. This one really weakened after looking like this is where we're seeing this broad base advance, XME, XLI, but XME is trying to battle back and rejoin the leaders in that sense.
Yeah, we had copper was a big performer today. Why don't we just take a cool look at FCX, because that was a really strong mover today. This is sort of the big copper producer. Tried to move above its 50-day moving average, and Southern Copper looking a little better here. So great day overall for all sorts of metal stocks today. All right, well, let's move on and take a look at a leading chip equipment firm known for its very pricey machines. This is Netherlands-based ASML. This is a leaderboard, a stock in the leaderboard model portfolio, and a good day for chip stocks today, and notable action in ASML today, Ed.
Yeah, so I mean, it probably was buyable back here when there was some positive news, I think from Taiwan Semi at the time, gapped up and it sort of held that for the most part. But now, after pausing there, it was a little extended maybe from the 50-day line, but came down a little bit, catching up. Retook the buy point today. Strong volume after some pausing. The volume is going to dry up, but it was a strong volume day heading into this. Heading in when at the market close. So a lot to like. This has been a long-term winner. Just looking at the weekly chart, there's been a lot of things here. It's been a long-time performer over the years. On a monthly, you can just see it goes on and on and on. So a lot to like about this name. This is a leaderboard name, I believe, and
yes, it is.
There's good reasons why.
Yeah, no doubt. This is a nice turnaround story. You can see when they reported first quarter results, earnings and revenue declined, but this is a company talking about pretty strong demand in the second half and into 2025 as well. So that's why you're seeing a lot of these chip equipment firms really talking a bullish outlook here. All right, let's move on. Haven't really been talking a whole lot about China stocks, but Tencent Music is a name that is looking interesting here. That is TME, forming a base, holding support at its 50-day moving average. This almost looks like an anomaly in China, Ed.
It is. Not many China names are doing that well. I mean, so this is interesting. It's really made a big move, almost tripled, over this period, in less than a year. It doesn't have the greatest fundamentals. Revenue has been falling. You're supposed to see maybe solid earnings growth. So that is one issue, is that it's made a big run and it doesn't have tremendous growth. But technically, it's paused after a big run, just like you'd want to do. Found support at the 50-day line, just like you'd want it to. It's moving up above a trend line today within this flat base. So this would seem like an opportunity to take a position here. Yeah, a lot to like about it technically, but yes, it is somewhat of a rarity, in terms of China stocks.
And then we also looked at, I don't know, I don't think we can call it the parent company, but TCEHY is in a very similar setup as well. Tencent, the giant internet conglomerate here, also forming a base. So between Tencent Holdings and Tencent Music, two interesting names to keep an eye on out of China. All right, let's take a final look at Agnico-Eagle Mines, AEM. This is a gold miner that is, well, gold stocks really had a good day today, and AEM jumped nicely above its 50-day moving average. And like I said, we put it on the leaderboard model portfolio today due to the stock's strength.
Yeah, and gold stocks has had a good day, as we were talking about those broadly with a lot of things. Much like Tencent, moving off the 50-day line, moving back above it and breaking a trend line within this base. Often gold is the kind of thing when it makes a move, and then sometimes it makes a really strong move, but there have been some instances where it'll move, and then just when you think it's going, it'll pull back. So at least starting a position early is probably a good way to go rather than waiting for the breakout. I mean, maybe if it keeps on moving, you can add to that position, but I think with gold, it's often a good idea to try to get as early entries. Nice move here. Maybe we're going to be pivoting toward rate cuts. Not like we've been expecting it, but there's been more weaker data. The dollar was weak today. That's probably contributing to the commodities. So a lot to like in this front.
Yeah, and we didn't even touch on, there was a whole slew of economic data. We had the ADP private payroll that was a little weaker than expected. I think jobless claims were technically a little stronger than expected, which is, I guess, what the Fed wants to be seeing here. And then ISM services very, very weak as well. So, like you said, the weakness in the dollar, how that 10-year Treasury yield ended up having, it was down.
Well, that's actually, and this is, I think, a little off. It's actually trading at 435, so it's giving up.
Okay.
It's quite a bit weaker, and the bond market is not yet closed. The bond market closes at 2 p.m. Eastern. Probably won't see a whole lot of shift at that point. Oddly enough, right at that point, we get the Fed minutes, right as the bond market closes. And from a practical perspective, the jobs report is imminent in the sense because the next time we're trading, unless you're trading pre-market, the jobs report will be out. So that is going to be something. We've had some weaker economic data. The jobs report may confirm that on Friday morning. That's definitely something to be looking for.
Yeah, and then stock market junkies, like you said, just need to wait another hour, and they can peruse the Fed minutes while the market's closed. And all right, well, that sounds real good, Ed. Thanks very much for your insight. Reminder: the market is going to be closed tomorrow for the 4th of July holiday. Wishing everybody a safe 4th of July holiday, and market will be open Friday for a full day of trading. We'll be back on IBD Live as we always are, just before 6:30 a.m. Pacific time. We go for about an hour and a half talking about stocks moving in the market, economic data, you name it. So, Ed, I hope you have a happy 4th. If you haven't checked out IBD Live yet, just go to investors.com/IBD Live, and hope to see you there. And we'll see you back here Friday after the close for another stock market update. Take care, everybody.